Hello guys, today I want us to look at journals. I want us to look at what we call journals. Journals are books of accounts. They are part of bookkeeping. Journals are also called books of original entry. Journals are also called books of original entry. This is because they record daily business activities. They record daily business activities. Journals record daily business activities. These business activities include majorly the buying and selling of goods, returning of goods, either goods returned by customers or goods returned by us to the suppliers. So we will have 5 major types of journals. One, we have what we call the sales journal. Sales journal. We have what we call the purchase journal. We have what we call the sales return. Sales return journal. We have what we call the purchase return journal. Then last and not the least, we have what we call the general journal. What we call the general journal. Now, the catch is here. Sales journal records what we call credit sales only. Purchase journal records only credit purchases only. Sales return records goods that were sold but have now been returned by customers. That means these customers are returning goods to us. We had sold to them, now they are returning to us. So this is also called return inwards because these goods are coming in our warehouse, in our business. So this is also called return inward journal. This records return of goods by customers. Then we have what we call purchase return. Sometimes you purchase goods or stock and you want to return it to the supplier for one reason or the other. For instance, the good can be defective. It might have been an expired product. You purchased without knowing. The product might be under warranty and it has gotten damaged. You have to return it back to the supplier. That will be called purchase return. Since we are taking that good out of our premise to somewhere, we call it return outward. Because these goods are being taken out of our premise. We call it a return outward. This means records return of goods to suppliers. These are goods that you had purchased, but for one reason or the other, you have to return them back to the supplier. Last and not the least, we have general journal. General journal records any other transaction that is not here, that is not captured by these journals. So it records transactions not captured by the above journals. By the above journals. At times, this is used to do correction of errors. Anytime you have made errors, we shall correct them using the general journal. And we shall be looking at that when we are doing correction of errors and suspense account. You will find we are using the general journal. For today, I want us to focus on these 4 journals. Or for this video, we focus on these 4 journals. We will focus on this when we are doing correction of errors. So let's do the format. The format of any journal is simple. Journals are drawn, unlike ledgers, journals are drawn in a box. We shall be seeing that, and we shall be doing an example. journals are drawn that way. Here we have total. Here we have date. Here we have what we call folio. Folio is a unique identifier to the transaction or the person who is involved in the transaction. Sometimes a folio can be an ID number, a national identity number. Folio can also be, if it's a person, folio can also be a passport number. That can be termed as a folio. Then in this column we have amount. So if it is a sales journal, it will look like this. If it is a purchase journal, you just change the name, you draw a purchase journal like this. If it is a return inward journal, same. Return outward journal, same. Each journal drawn in a separate box. Let's look at an example. Let's look at an example. So here we have an example. We are told that the following transactions relate. The following transactions relate to Pesh Enterprise for the month of October. October 1st, bought goods on credit from Tom, 50,000, Jerry, 20,000, Bonnie, 120. Since these goods were bought on credit, we record them in purchase journal. So I will do my purchase journal here. Do my purchase journal. Just a minute. I will do my purchase journal here. Can do a bigger one. We have date, folio, details or description, then I will have amount. I'll assume, I may not assume. Okay, so here I will draw sales journal. I'll draw sales journal. We have date, folio, details. Let's go to the first transaction. We are told that October 1st bought goods on credit from Tom 50,000, Jerry 20,000, then Bonnie 120. So we record here, these are purchases. October 1st, we have Tom, we have Jerry, we have Bonnie. Tom 50,000, Jerry is 20,000, Bonnie 120,000. Oh, this is October 1st. October 1st. You just list all this. Let's go to the other transaction. The other transaction is made cash sales to Fiona. Made cash sales to Fiona. This is not recorded in a journal. Why? It is sold on cash. It is not recorded in the first 4 journals. Then we have sold goods on credit to Patrick, 30,000, fine stand, 70,000. So that is recorded to sales journal. So we go to sales journal. The date for this transaction is October 7th. So we will have here October. We will have October 7th. We list Patrick. We list fine star. October 7th. Let's look at the amounts. The amounts is 30,000 and 70,000. You just write the amounts again. You can rub this line. 30,000 and 70,000. That's how simple journals are. Then we have Bought furnitures 25,000 using cash. This will not go to the journals. Then you have credit purchases from Anne. This goes to the purchase journal, 40,000. So we have October, the date is October 24th. So we have October 24, we have Anne. The amount is 40,000. The amount is 40,000. We purchased from Anne an amount of 40,000. Let's go to the next. Returned goods to Tom, worthy 15,000. This goes to, we are returning to, that means we had purchased. And we can also see here. So this goes to purchase return or return outward journal, 15,000. So we open a purchase return. Purchase return journal, which is also called return outward. Purchase return journal. This one, I have seen the question is only one. So here we have October. So we have date, folio, details, we have amount. So we have October, the date is October 26. October 26. In this October 26, we are returning goods to Tom, 15,000. So just write Tom, 15,000. Okay, just simple. Let's go to the last one. October 28th, returned goods to us. Patrick returned goods to us worth 12,000. This means we had sold to Patrick. So this is sales return. These goods were sold to Patrick. So Patrick is returning. So I'll draw it on this side. We will have this. Date, folio, details, amount. So we just write the date, October 30th. Patrick returned goods worthy 30,000. Sorry, 12,000. The amount is 12,000. We had sold to Patrick goods worthy 30. He has returned 12,000. So now we are done with the journals. What we need to do is to close these balances. Yeah? To close, get the totals. The best thing with journals, they are the easiest to prepare, more than ledgers. You just get the totals. So here we'll have total. Here I will have total. I'll have total. For this one, you just get the totals. This is 50 plus 20, that's 70,000. Plus 120, that becomes 190, plus 40,000, that becomes 230,000. You get the total, write it there. This one, 30 plus 70,000 becomes 100,000. This 12,000, total is 12,000. This 15,000, total is 15,000. Total. That's how easy it is to do journals. Imagine. Let's do ledgers from this. We can do ledgers from journals, especially sales ledger and purchase ledger return, purchase return ledger. So this was sales return journal. Let's do the ledgers from here. I show you how to post those transactions to the ledgers. One thing, I will not post these to the ledgers. I'll not post these to the ledgers for now. I will focus on how to get them. Remember, we have already covered how to do ledgers for this. For this, if you have to do ledgers, you go to sales, you credit sales, you debit Fiona. We can do that, but I want first to show you how to record journals from, how to record ledgers from journals. Let me rub part of this. Let me rub part of this. I can start with sales ledger, sales. So here I will have debit, I will have credit. Then I go to purchase, sales account. I go to purchase account, we have debit, we have credit. Okay? So simple. If you want to do to record this, you can just pick this, the total 230,000 as at the last date October 2024, or the last date of the transaction is October 30th, 230,000. So you just write credit, sorry, for purchases we normally debit, so it comes this side. Credit purchases. Credit purchases, you get the total of 230. Okay, just that. You can also do the same for the sales account, and you say as at October 30th, credit sales. Credit sales from the journals, from the journal here, credit sales total 200,000. So we will just post 100,000. So if you want to record this, you can also record per individual, because you have the list. The list is there. The list is in the journals. This you can break it down to each individual. Then you record now the cash sales. You record the cash sales. That is how you take the balance from the journals to the ledgers. Again, it can also be like this. You can also do it this way. Let's see. Let's see. For sales, we can go to the journals, pick specifics. Sales, we have October 7th, Patrick Feinstein. So I'll come to the sales journal here. On the credit, I write 7th October, Patrick Feinstein. The same total here, 30,000, 70,000. Just to confirm that, yes. Then, if I want to write this cash, I can still write it. Now, we have 510, we sold to Fiona. Fiona, 60,000. Okay? For these ones, for Bonnie, I can copy them from the again from the purchase journal. If I was to copy that, we have them here. We can copy them again. However, because you have done ledgers, I just wanted to show you how to do the double entry for that. I can rub all this. So now, after you have copied like this, you would come and now open an account for Patrick. This was credited, so for Patrick, you debit. You just write 7th, 10, sales, 30,000. Okay? You go to Finsta. We have credit, debit. This was credited, you debit. We have 7, 10, sales, 70,000. You go to Fiona. Fiona, we have 5, 10. You can also specify. Sorry, this was cash. Since this was cash here, we can write Fiona, then you just write cash. So this would go to cash account. Cash account. So in the cash account, you debit and say this is sales, and you can specify this sales is from Fiona, and the amount is 60,000. That's how you use the journals to do ledgers, or cross-check, cross-examine ledgers. For more details on how to do the ledgers, please look at our previous videos on ledgers and watch them. Thank you.